Hello, traders. This is Dave with the SPY Super System Trading Room and Text Alert Service. And tonight I'm going to do a webinar or a quick video, not necessarily that quick. We're going to cover the indicators that we use in our SPY Super System software, which the SPY Super System software identifies when institutions are in the trade and when they're not. And we're going to go over the indicators that you use on both the 5-minute chart and the daily chart. The 5-minute chart for taking intraday, quick type intraday trades, and the daily chart when you're looking for swing trades, overnight trades that may last overnight to 2 or 3 weeks. So we're going to test out, but we're going to show both of those indicators. We'll throw some live charts on those, and I'll also use my TC2000 chart to take a look at some of the support and resistance levels on the charts that I see, which come into play when you're looking at a swing trade. Okay, so again, I have a live trading room that runs every day from market open to market close. I'm in that room all day long, answering questions, showing charts, and posting trades that we decide to take. We can only take the very highest probability ones. Then I have a text alert service where some of the high probability trades that we take are sent out to the traders on the text alert service so that they can trade, and they go right to their phone. All right, so we're going to cover the SPY Super System indicators, and we're going to talk about how you find these trades and how to avoid some of these trades that wouldn't work. Okay, so first thing you have to do is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, this, by the way, it's called the Compass SMS Text Alert. It's actually the SPY Super System of Text Alerts now. It was originally the Compass. That's when the system was first developed. It's now called the SPY Super System since it's been enhanced over the last few years. And that would be the text alert service for that. And this is what it looks like, just a graphic of how these come to your phone. Okay, quickly, I want to go over what moves the market. And this is kind of the crux of the whole situation. What moves the market? These little marbles are retail traders such as myself, and I suspect everybody else who's watching this. Retail traders, you have to understand, we can't move the market. We don't move the market at all. The market is moved by the institutions. This is the big marble here. These are the institutions. Institutions are investment banks, Goldman Sachs, Morgan Stanley, JP Morgan, all of those big investment banks. They're also made up of hedge funds, mutual funds, and pension funds. So that's where the money is that drives the market. Now, our job as a trader is to try to ride the waves when the institutions come into the trade. And that's what the SPY Super System does for us. We want to know when there's a big enough confluence of institutions buying or selling to follow them. All we're going to do is follow them. Now, they're not always going to show that, because a lot of times the institutions some can be trading long, some can be trading short. They're just kind of conflicting with each other. But what we're looking to do is identify situations when the institutions in a big enough force are moving a stock or an ETF in one direction or another. All right, so that's what we're looking to do with the SPY Super System software, and I'll show you the indicators and how we use those. All right, so that's the key here. We don't want to be trading with just the retail traders are in here. We're going to get chopped up, and it's chaos all day long when the institutions are not moving in the market in any direction. And I'm sure you've seen that plenty of times with all the chop. This is a little bit off. I guess it seems a little off subject, but this is a blackjack game, ace and jack of spades. We get a blackjack here. These are a couple $100 chips. And what does this got to do with the SPY Super System and trading? Well, when I first started trading, learning how to trade, I was questioned by a lot of people that told me that trading was gambling. Trading stocks, options, you were just gambling. You couldn't win. It's fixed. You can't win at it. And the reason I point this blackjack analogy out is when I was much younger, I made my living playing blackjack in the casinos in Las Vegas as a card counter, quite a long time ago. But what a card counter does is we don't actually count cards. What we do is we keep track of cards as they're removed from the deck as the hands are played. And as little cards are removed from the deck, that increases the advantage to the player. And as big cards are removed from the deck, big cards being Jack, 10, Jack, Queen, King, and aces, that swings up the advantage more to the house. A neutral deck, the house has just a very slight advantage. So my job was to keep track of whether the deck was in my favor or in the casino's favor. When it went into my favor, then I would make bigger bets. And when it was in the casino's favor, I'd bet the minimum. All right, so why this is important is trading stocks and options is very similar in that without knowing what the institutions are doing, the trader has no edge. So in essence, he's gambling. So if you don't have a methodology and you can't identify what the institutions are doing, when they're driving a trade, then you don't have any edge. And because of that, you are actually gambling. But with a method, a system, a method, a way to identify institutions, now you can have an edge over the other retail traders, and there's millions of them out there trading. So what I say is the SPY Super System, which is the software I'm going to show you, it's my card counting system. It gives me an edge over the other traders, allowing us the ability to become consistently profitable traders. It's the same thing I use for winning, making money at blackjack. It's the same thing I use to trade. It's the same theory. You have a methodology and a system to identify when institutions are in the trade, right? And the SPY Super System, in conjunction with identifying the best high probability trades, can lead to consistent profits. In other words, when you have institutions in the market and they're driving a trade, then our job is to then find the best trades that we can take, or the best stocks that we can take at that time, and trade those well within the market trend. So if the market's moving up based on the institutions, we want to take the very best trades. Okay. And in the room and on the alert service, I have a couple of rules to trade by. I trade the best, skip the rest. Very easy to say. We're just finding the very highest probability trades. This is very important. Skip the rest. We can avoid trades that look good but would likely lose. Don't have as big an edge. We want to skip those. So the system allows us to do that. And this is important. Our objective is not to make trades. Our objective is to make money. One of the biggest errors that most retail traders make is over trading. They just are not able to maintain patience. They have to be jumping in trades all the time. If they have a couple of trades on in the morning and an hour goes by, they can't sit on their hands and just watch. They've got to dive back into some more trades, and they start to make all kinds of crazy justifications for taking trades that aren't high probability trades, and they bleed their money away. All right, and it's important to maintain discipline. And what I mean by maintain discipline is to learn and follow the process. Maintaining discipline means having strategies and methodologies that you know are going to work. All the strategies that we use in the room work between 85 and 90% of the time. So you want to stick to those, not drift around, listen to other news on social media or coming off CNBC or Bloomberg or any of those other places. Know what the methodology is, internalize it, and trade it that way. So you get to learn and follow the process, and you must remain patient. Wait for the stocks to come to you and set up and come back to a support level, for example, and bounce off of there. That's what you're looking to do. So remaining patient is also very critical. All right, and again, as a profitable trader, we need edges. So what are our edges? The SPY Super System software tells us if the institutions are in the trade or not. This is important. We only want to be in trades when the institutions are in the trade. If they're not in the trade, I don't want to be any part of it. And then we trade relative strength and relative weakness. This is something that a lot of retail traders don't seem to understand. They think this means RSI. This doesn't mean RSI. This means if the S&P 500 is moving sideways and down, and you've got a stock that's stacking green candles, then you've got a stock with relative strength, and vice versa, it's a relative weakness. It's going to increase your edge on that trade if you take a stock with relative strength to the upside and relative weakness to the downside. Trade with the market trend. If you've got a trending day in the market that's bullish, you're likely going to want to be trading long stocks. And if it's trending bearish to the downside, you want to be taking some bearish stocks. You're just trading with the market trend. It's not that complicated. There are a lot of days, of course, when the market is just going to chop around and you don't really have a trend. Then you've got to focus on institutional trades and relative strength, relative weakness. And the last thing is buy near support and sell near resistance. Very important. Don't be chasing stocks that are ripping higher or ripping lower. Wait for them to come back to a support level or a resistance level and enter them there so that your downside risk when you take the trade is minimized. Okay? So the topics that we covered here, we're going to look at the SPY Super System indicators that are on the chart. We're going to find the highest probability trades on 5-minute charts, and we're going to find the highest probability trades on daily charts. These are two separate things, because when you take a trade, you normally need to know whether this is going to be an intraday quick trade or whether you're taking this trade to swing, which means swinging it would be all day long or overnight or maybe even 2 or 3 weeks. So there's a difference between the indicators in the time frame that you look at for these indicators. Okay, so those are what we're going to be looking at. We're going to be looking for finding relative strength and relative weakness. I've talked about that a little bit. And I'm saying technical charts tell a story. This is really important. When you look at a trade, you want to look at the daily chart, and you want to take the context of that particular stock. We'll look at some stocks later that you look at the daily chart, and if you look at it and you can see a nice trend, they're not just chopping all over the place. If you can see a nice trend, that's telling you a story. It's telling you that that stock is bullish. The institutions are in there buying. It's moving smoothly up. It's not having any dramatic chops up and down, up and down. It's moving smoothly up. That's a story. Those are the kind of stocks that you want to find, where you can look at the stock and have a relatively good idea of where it's going to go next. If you're looking at stocks that are chopping up and down, you don't know where they're going to go next. You don't want to be trading them. All right, and finding and using support and resistance levels, we'll talk about this as well. And again, one thing here, algos have taken over the market. Let's join them. This is just a comment on the fact that the market, the institutions all have programs, and they write these programs to look for specific setups. They look at the news. If you ever looked at the SPY, when the jobs report comes out on Friday at 8:30, first Friday of the month, you'll notice that the market has lots of volume coming in at 8:30 in 1 millisecond. Before anybody has a chance to even click their mouse, the institutions are in there. Those are the algos reading the news and trading off of it. And they also can understand and trade based on what they think that retail traders are doing. Like MACD crossovers are one thing a lot of traders use. And the institutions can then understand, they look at the MACD, they can see it just like you can. And if a MACD crossover occurs, they can actually force that MACD crossover to occur and then trade again, and then basically bust it when it breaks out to trap a lot of retail traders. They know where traders have their fixed stops at, and they can trade off of that as well. So that's what algos are doing. So our job is just to find out know what they're doing by looking at the SPY Super System, because those are the institutions, and we want to join them. That's basically what we want to do. And again, how algos take money from retail traders, I just quickly mentioned that. Something like MACD crossovers, trading RSI, different strategies that traders will use. They'll find a bull flag or a bear flag on a 5-minute chart, or they'll find a shooting star, a candlestick, a lot of different setups, and the algos know all about these things, and they can write programs to take advantage of that and take money from retail traders. Okay. And the compass system, or the SPY Super System we call it now, it identifies the highest probability setups while sidestepping setups that look good but will fail more often than they succeed. This is how we are successful. And again, it does this by identifying when the institutions are driving the move and when they're not. It analyzes complex trading data. And this is the SPY Super System that used to be called Compass, and displays the results in an easily identifiable visual format. Colors, it shows colors. So this visual element makes it possible for even new traders to find high probability trade setups. So what's our edge? We only take trades that are being driven by institutions. We trade stocks that have relative strength and relative weakness that I mentioned. That's not RSI. And trading in the direction of the overall market trend. It gives us an edge, obviously. Our trades will be supported by institutional buying and selling. They'll be outperforming the index, and they're moving in the direction of the overall market. If you follow these guidelines for your trades, you're going to be heads and shoulders above about 98% of other retail traders in the world. Okay, the SPY Super System software that we're going to be looking at, and we're going to be looking at the indicators in there. I want you to understand something, that this SPY Super System software is the critical element in finding and trading the highest probability trades. This is how we get the results that we get, and I'll show you some of the results before we get into the indicators. but the SPY Super System software is the engine that drives our exceptional results, which you'll see. The ability to identify when institutional players are driving a bullish or bearish move and when they're absent is the key factor in pinpointing high probability trade setups. That is the function of the SPY Super System software, and it's a critical component, which is why I'm going to spend so much time on the indicators and what they mean. All right, and this is just a high probability trade setup funnel. This is the mental process that I go through virtually. When I look at a trade, I look to make sure if I'm going to go long, the daily chart is bullish. If I'm going to go short, the daily chart needs to be bearish. Unless this is just going to be a very quick 5-minute chart that I'm only going to be trading for a few candlesticks, I need to be aligned my trade with the daily chart. And then I look at the 5-minute chart to get the best entry. The trade with the trend, you want to trade with the trend, both the stock trend and the market trend, if you can identify it. Sometimes they're choppy and you can't. And then this is the key one. The SPY Super System must align. SPY Super System must be bullish if you're going long, must be bearish if you're going short. And that's true on a 5-minute chart or a daily chart. Those indicators have to agree with the direction that you're trading. Then you look for stocks with relative strength, with all these other things meet those criteria. You look for the relative strength and relative weakness, and then you look to enter near support and sell near resistance. That's the whole method that's going to give you become consistently profitable trader. Okay, and just so you know what we do in the room and in the alert service, we trade straight calls and puts, we trade straddles and strangles, which are non-directional trades. We use debit spreads using weekly options expiration. I do time spreads or calendar spreads over earnings. This is a non-directional trade where we capture volatility crush. I have a weekly ATM strategy where we sell puts every week against a neutral to bullish stock, and we hold a longer term dated put out and further in time to protect that position. We do credit spreads, which we actually have one on Microsoft right now, but credit spreads to capture premium. And we also do SPY Super System trades in the room. These are very quick, high probability, very fast trades off the SPY, the Q, and the IWM or the futures. And we take them in the room. Anybody who has the software or is in my room can spot these, but we can't post them. All we can do is identify them when we see them. And it's very, very successful. Okay, and the alert service, just so you know, it's designed for day trades and short-term swing trades. This is not an investment business or investment service. It's designed for traders who can't watch the market all day. We put out real-time alerts on the highest probability trade setups we can find. What are those? Obviously, we're looking for trades when the institutions are in them and when the market internals are in our favor. And when we do technical analysis beyond that to come up with the best. Market internals would be things such as amount of volume to the upside versus minus amount of volume to the downside. If you've got more volume coming into the upside on more stocks, then you get bullishness. If it's vice versa, you have bearishness. Okay, and this is what the alerts look like for anybody who's interested. We did one on Nike here back on March 28th. This is what the initial alert would be. It would say the date, stock symbol, the buying April 11th, 67 puts, so we were going short, and we paid $285 for them. After we've gotten into the trade, I would put out another alert with a sell order on it. So when those would get in for $285, we had a sell order for $9, and they were sold on April 3rd for $9. Huge gain on this particular stock. This is not normal. We don't usually get those kind of gains, but that was a huge gain. So that's what the alerts will look like when you get them on your phone. Okay, now, and I'm going to show you right now the results. I want you to see the results we had in just kind of a quick snapshot, just so you can see how effective the SPY Super System methodology is. But here's our results in 2023 using $2,000 per trade, and I just use this as a baseline. You know, obviously, if you are using more, you'd make more. If you're using less, you'd make less. But in 2023, we did a little over 60,000 in the room. 2024, about 55,000. And you know, there's a little difference, but that typically is because it was a choppier year, so you couldn't stay in trades as long. And this past March and April, we had 4 trades on. These are the only trades we had on during the last week in March and the first part of April. And that was the week where the tariffs were put on. and then they were taken off 2 days later because the market crashed so much. The SPY was down over 10%. These are the only 4 trades we had on in the room and in the alert service. They were all bearish. We had AVGO, which is Broadcom. Broadcom, we were in for 75 cents and we got out for $1.04, 39% profit. On Nike, that's the one I just showed you. We entered on 328 for 285 a contract. We closed it for $9 on contract. That was a massive, massive 216% profit, really huge. That was the best trade of the year. We also had Sarepta on, 450 a contract, closed for $8. That was a 78% profit. And we had NNE on short, entered for $1.80 a contract, or 180 bucks, closed it for 225, 25% profit on that. Those are the only 4 trades we had on in the room and on the alert service during that particular period of time. It was very, very volatile, if you remember it. These were our July trades right here, just so you can see. These are the kind of percentage gains you can expect using this methodology, trade after trade. 40, 20, 32. This is the range most of them are going to be in. Obviously, we have losses just like everybody does, but not very many. This was our July trades, and you can see the nice smooth percentages here: 36, 30, 14, 13, 77, 36. All very nice wins on this. Sarepta 166. That was another nice trade in Sarepta. So in July, we had 30 wins and 3 losses. This is our best month of the year. 30 wins, 3 losses, 91% win rate. 2,000 invested in each trade has produced $16,829 in July alone. So big month July. That's not normal. Typically, that they usually run between 3,500 and 8,000 or so profitability per month. All right. So we're going to look at the SPY Super System indicators now. We're going to look at it on the 5-minute chart for intraday trades, and we're going to look at it on the daily chart for longer term, which are overnight, well, for 3 weeks for swing trades. It's different. The different methodologies, whether you're using a 5-minute for an intraday trade or daily for a swing trade, there is some differences in the indicators and how to use them. Okay. The main indicators for trades using the 5-minute chart. This would be for fairly quick trades that you're doing intraday. We're going to look at the current time frame momentum. You're going to look at the VWAP, the volume weighted average price. Very important to have this on your chart, right? All the institutions use that. We're going to be looking at the 15 EMA. We're going to look at some things called pop out of the box arrows. These are compression break arrows. We're going to look at pivot points, and we're going to look at the market internals indicator. These are the what we're going to be looking at for the 5-minute trade. For daily charts, for swing trades, we look at the current time frame momentum, same as we did for the 5-minute, but we also look at the multi-time frame momentum, and these need to be aligned. We also look at the 15 EMA. We look at the pop out of the box arrows again. Again, these are breaks of compression, but we'd be looking at them on a daily chart. In the daily chart context relative to the SPY. In other words, how is the stock, what's the price action look like in this stock on a daily basis versus what's the SPY been doing? Okay. And again, always be aware of the location on the daily chart of the 50, 100, and 200 SMAs, this simple moving averages on the daily chart, because those are, all 3 of those are very, very strong support and resistance levels. And you don't want your trade to be anywhere too close to those that would basically minimize how much money you can make on the trade. Okay. Now I'm going to show you here a couple of charts before we get into some. I'm going to go into some real ones, but I want you to see the indicators. And here's the indicators. This is where we start the training. We start with the momentum oscillator. This is the Laguerre oscillator with it has the divergence stripped out. This is pure momentum. So this is the actual indicator that's creating the current time frame color. Right? This is the current time frame momentum right here. On a 5-minute chart, this is the 5 minutes momentum. It's letting you know whether institutions are in there or not. These things have colors. They can be red or yellow for bearish, blue and green for bullish. So you can see in the current time frame momentum right here on the triple Qs, this is the triple Qs, that we went from selling, institutional selling here to institutional buying on the 5-minute. The multi-time frame was still showing up as red. This is the 15 and the 45, right? This is a long-term trend. This is a trend. I don't use this as much except on swing trades. I don't use any of these things except for the current time frame momentum on the 5-minute chart. Right up here, we've got the VWAP, the thing I mentioned to you, the volume weighted average price. This is critical on a 5-minute chart because this is going to be your major support and resistance level to enter trades off this volume weighted average price, because it's what the institutions use. If the price has gotten away from the VWAP, so you want to have something else to use as a support and resistance level, the 15 EMA right here is what you use. 15 EMA, this is a smooth 15 EMA of an EMA, all right? This is a pivot point. If only have one pivot point, the SPY super system creates this. This pivot point is a very strong support and resistance level. Now, I don't get into the trades based on those, but if I was in a trade here, for example, short, coming down, I'd be getting out as it get down to the pivot point, because they typically are going to offer some support to the downside and resistance to the upside. Right, so that's what the indicators look like. Now, there's one other indicator that we just added that I didn't have on that chart, and it's called the $ VOLD. This is the market internals, and this will show up on the 5-minute chart only, and it'll show up for the current time. You don't go back and look at it, but it's going to tell you at the point in time that you're looking at the market what the trend should be right now. Right now it shows it's trending down, but it's yellow. So it isn't gone to red. It's not very bearish, but it's slightly bearish. So this tells you what the trend of the current market is right now, all right? Market internals. So that's the current market momentum indicator right there. So that would be also one we use. Now, on the software, if you get the software, you're gonna have this kind of a template, and you also have another template. You have a template that looks like this. This is for folks who are just gonna trade the 5-minute chart. Just do quick intraday trades. It has all the things we use for the 5-minute chart. It has the current time frame momentum, this isn't the most critical thing. You can see right here, this is how we make trades on a 5-minute chart. This lets us know whether institutions are in the trade or not. Right? There's your VWAP right there, volume weighted average price. There's your 15 EMA, that's another support resistance level. There's your pop out of the box symbols right there. That's all you need to do intraday trades on these. All right, so if you're looking at this particular chart here, which happens to be the SPY, you see that it's mostly been by buying, but you know we go to a yellow here and then we go back to green. This would be an entry where you could take a long trade in the SPY as it breaks above the 15 EMA with a pop symbol, which means it's breaking out of compression. You can follow it up, and then you would exit out of the trade right here. And notice it goes back to yellow here as the institutions start to turn to selling on the 5-minute frame. So this is what we would do for 5-minute trades. So these are your key criteria for 5-minute trades: current time frame momentum, VWAP, 15 EMA, and you can use these pop out of the box symbols. Right? It tells you where to enter, where to get out. This tells you what the institutions are doing. This is the new template that you can get. If you get the SPY super system, you get this template and you get the original template back here, and you can swap them back and forth during the day, depending on whether you're looking to do swing trades or 5-minute trades. 5-minute trades, this is all we need. Don't need the rest of the indicators. All right. This was a 5-minute trade that we took on a line not that long ago. This was back, I think, yeah, August 1st. But if you notice that this is a 5-minute chart, so this is what I'm really interested in right here, the current time frame momentum. Even though it has multi-time frame on there and trend on there, this is what I'm looking for. And if you look at a line right here, you see the VWAP. Stock is the price is moving along the VWAP. There's your pop out of the box symbol right there. Okay, so this is where you would take the trade, because notice it went from green buying, right, to yellow selling. This is bearish, bullish, bearish. The institutions have started to sell right there. So that's where we take the trade right there. This is the trade we took, and we get 51% in an hour on this particular trade. You see how the VWAP becomes our stop? We stay in the trade. Now, as the price moves down, it gets extended from the VWAP. So now the 15 would become our stop, which is right here. And we just followed this trade down, and we were in it for an hour, and we took profits as the momentum started to fade right here. And you notice the current time frame momentum stayed red the whole time. Selling, 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 selling. Here's a little buying coming back, and you don't want to be in short when that happened. We get out just before that. But that's all you're looking for on the 5-minute chart. If this was a daily chart and you were looking for a swing trade, now you would be looking at the current time frame momentum and the multi-time frame momentum. All right, I'm going to look at some regular charts here in a minute to go over some of these things. This was a daily chart. This was URGN. This was a trade we took in URGN. Now we have to take into consideration current time frame momentum, multi-time frame momentum, and even the trend. But these two especially, current time frame momentum, multi-time frame momentum. We're looking at the daily chart here. So you can see that the stock is moving sideways. It's compressing right here. We had red right here, even though we had green here. You cannot take a long trade or a short trade when you're on a swing basis, when you've got current time frame momentum bearish, current time frame, multi-time frame momentum bullish. They don't correspond. You're not getting any institutional buying or selling here, right? They're obviously trading against each other. But notice when the current time frame momentum switches from red to blue, right here, the institutions now are back to buying again. They're already buying on the multi-time frame, and we get a good trend right here. So what you look for is you look for an entry spot on the daily chart that's going to give you your highest probability setup. And you notice right here how compressed this is. This is where we bought it right here on this move this day as it broke above the previous day's high. This is where we get into the trade, and we rode it, and it didn't do anything for a couple of days, and then we get this nice pop right here. And one of the things that these institutions indicators will tell you, the current time frame momentum. Notice how it stayed blue or is blue, but the multi-time frame was green. This is telling you you've got a stronger multi-time frame than you have a current time frame, but they were both bullish. But this is indicating once this switched over to green again, this is telling you there's likely to be more buying coming in here pretty soon. So we were in here and we just kind of rode it, let the time go until there we got the pop, and there we took the profit off of that one, right? But this is a swing trade because it's a daily chart. We need the current time frame momentum and the multi-time frame momentum to be aligned in our favor, all right? And I'll show you some how I had to look at a daily chart on my TC2000 to take a look at some of the other indicators from 50, 100, 200, those kind of things. But this was a nice trade, all right? And you can see what we did here. So these are the indicators we're using: current time frame momentum, multi-time frame momentum for a swing trade, current time frame momentum only for a 5-minute trade. Okay. Okay, now we're going to look at the SPY Super System live charts, and I'm going to bring up the Thinkorswim platform. That's where the actual SPY Super System is loaded onto the Thinkorswim platform. Now you don't have to trade on Thinkorswim. I don't trade on Thinkorswim, but the software allows you to put the SPY Super System on Thinkorswim, and it's going to trade off of there. It also runs on Ninja, but I use it on Thinkorswim. And you don't even, you can download Thinkorswim platform, and I don't think you even have to pay for anything for that. And then you can have the software, you can buy the software and load it up if you want to. All right, so let's take a look at some charts here. Let me bring it up. Let me bring up the charts here. Okay, so this is the SPY Super System live right here. This is Friday. I don't have after hours on here. I could switch over if I wanted to switch over right now. I could switch over to 5 minutes, and then I can switch over to the ES and look at see what the futures are doing tonight. As soon as that gets out of the way. All right, so there's the futures. So there's the SPY futures right now. They're up about 0.1%. Not very much movement here tonight in the SPY futures. But you see what the futures are. The system, you can also use this futures for after hours if you want to, because here's your indicators. All right, but if you be looking at 5-minute futures, you're only interested in this right here. All right, current time frame momentum for the ES. Right, but I'm going to switch back right now. I'm going to switch back to SPY, and we're going to go back and look at the price action on Friday. All right, so this was the SPY at the end of the day on Friday. All right, and you can see the different colors here. This is current time frame momentum, multi-time frame momentum. This is what I'm interested in if I'm going to trade the SPY on a 5-minute basis. And you can see we're getting a lot of chop here, and we had a terrible amount of chop on Friday, right? So let's go back in time and see if we can find anything that maybe we would take, all right? So we look, you can see there's not much going on here. Notice we've got some green here. Current time frame momentum is pretty green, about 1 o'clock. But look where the price is. It's sitting right on the VWAP. It's got a pivot point just above it. It's got a 15 just below it. This is jammed in a big wedge of support and resistance levels. This is not a safe trade to take. Even if you got green here, you're not going to be taking this because the price action has been horrible. It broke out a little bit right here, but again, it's right at the pivot point. I don't want to trade into a pivot point or back with I got a 15 below and a VWAP right there. So that was not a good trade. So let's see what else we could have found on Friday. Not much. It's a very choppy day on Friday. Right? We're already back to Friday morning here. There was one trade you probably could have taken right here about 10 o'clock, 10:15. You could have taken the SPY short. Notice it went short right here from green buying to red to yellow selling, but it was too far away from the VWAP. So you wait till it gets to the VWAP and then starts to come down, and you could have taken it right here as it broke below the 15 and ride it down. But you're not going to get much movement out of this because it was a very choppy day, but you would have made money on the trade. And of course, when it got down here and it turned blue, you had to get out. You got to bail right here as you get it pop out of the box. So this is the movement you would have had, and that wasn't an awful lot, right? So that was on Friday. Let's go back onto Thursday, see if we can find any trades on Thursday. All right, there's one right there, but notice the pivot point. If you took this, you would have had enough room between the VWAP, which is the pink line, and this pivot point to justify taking the trade. Is there enough? That's a 644.07 up to about 644.53. Probably enough to make about 35 to 50 bucks contract on the SPY. I don't know if I'd take it or not. It's a little bit risky, but notice it went from selling right here to buying right there as it broke above the VWAP. So the institutions were coming into this, and again, this is the only thing we're interested in. So we had a little bit of strength here, but then it faded away pretty fast, and now you're starting to get all kinds of mixed colors in the indicators. No real movement on price at all. And so that was one you could have had. And we're going back to, it wasn't an awful lot here to trade on Thursday. So we've had some choppy days. We'll go back and take a look at the SPY, right? And going back. Now it was a decent trade right here. This was the SPY, okay? This was on the 13th, right there. See how we get a pop box symbol right here as the stock breaks below the VWAP and the 15, right? And notice it's red down here. Current time frame momentum is red. The momentum indicator is right at the bottom. This was a trade, and in fact, I took this trade. You take this trade right here as this breaks down below it, and then you use your 15 here as your stop, and you write it down. And as long as the stock price doesn't get back above the 15 and close above the 15, you can stay in it. The first time it closed above it was right here. I took it off right down here as soon as I started to get any kind of green candles. But so I wrote it down from here to about 644.23 down to about 643.29. So that's pretty good. It was about $120 a contract profit. But that is the way you would do it. And you're just looking at again on the 5-minute chart. These quick trades. You're looking at the current time frame momentum only. Current time frame momentum, VWAP, 15 EMA, and your pop signals. That's all you need. You don't even think about these. It doesn't make any difference. If this is bearish and this is bearish, it gives you a little bit more confidence. But this is what you're trading off of. You obviously don't want to be in it short when it trades back to blue again. And so that was a decent trade on the SPY. All right. Now, let's take a look at a couple of stocks, because you can use this on stocks as well. And so there's Amazon. This is Amazon on Friday. We get back over here. All right. So this was Amazon on Friday, and this is late in the day. But let's see what it looked like during the day. All right. So it looks pretty short here. All right. But see how it's coming down. But see, that's blue. You can't go short. You can't go short. It's going to yellow. You can't go short. You can't go short here. It's still below the VWAP. So you're looking for an entry perhaps where you can get a little bit of a break. Now here we go from green buying to yellow selling right there. Right here is where I would have got in. Right here as it breaks below the VWAP. Okay. Now this is a pretty bullish stock on the daily chart, so you have to be careful. But this is where you take this trade, and you're taking it below the 15. As long as it stays below the 15, which it closed below the 15 all the way down and came right down to the pivot point. See the pivot point right there? This is where you've got to be thinking about getting out of the trade. As it gets down to the pivot point, and you take your profits, because it's likely to bounce off of there, which is exactly what it did. All right, so that was an Amazon trade on Friday, and I can keep going back, and you can look for these setups anytime during the day. This was a decent Amazon long right here. See how we went from from yellow to blue. That's the selling to buying after they've been already buying. They switch over to buying again. The institutions do. You're popping right off the 15 EMA. You take the trade right there as it goes green, and you ride the 15. As long as it stays above the 15, you stay in the trade. You get out here, and here you get out. You get a red candle to the flush, so you're out. And you get in way down here, so you get into about 230, about 230.83, and you're out at about 232. So that's a pretty good run in Amazon right there. But again, you see what you're looking at here. You're looking at the 15, the VWAP, and you're looking at your current time frame momentum. And notice it stayed green the whole way here. Institutions were buying all the way through here, and this was telling you that we're doing that, and you were riding that up, right? And if you'd be looking at this trend, and this is at the end of the day, this would have been different at that point in time. And if the trend was up in the market, that would have given you a little extra confidence in taking that trade long, because you would be trading with the market. But this is how you use the SPY super system to use the current time frame momentum. You get the current time frame momentum, you get the VWAP as a SPY support resistance level, you get the 15 as a support resistance level, and you get your pop signals telling you compression is breaking. That's all you need to trade the SPY super system on a 5-minute chart. That's it, right? I mean, your support and resistance here is going to be the 15, the VWAP, and the pivot points. Those are going to be the particular support resistance levels you're going to use. I mean, you can look for other things, like horizontal resistance levels or horizontal support levels based on a 5-minute chart. But this is typically all you really need. Current time frame momentum, multi-time frame momentum is going to be for daily charts. Current time frame momentum for 5-minute charts. VWAP for 5-minute charts for your intraday trades, and the 15 EMA. Those are the key levels. All right, so those are ones that we would be looking at. All right, for the 5-minute chart. Okay, so I'm going to move over and we're going to do some daily stuff here. All right, so let's take a look at a daily chart. This will be swing trades. Now, on swing trades, remember what I said. The current time frame momentum and the multi-time frame momentum have to be aligned in order to take the trade. Take the trade long, they both would need to be green or blue. In short, they would need to be yellow and red. This Amazon, if you look at Amazon right here on the daily chart right now, as it ended up on Friday, notice you've got yellow or bearish on the multi-time frame and bullish on the current time frame. You can, based on this, you cannot take the Amazon long based on these two candles, these two indicators right now, and the trend is even red. So there's nothing else on here that matters. If this doesn't align, you can't take the trade, right? So let's take a look at some other ones here. Let's take a look at Hood on the daily chart. All right, so here's Hood. Now notice we've got current time frame momentum and multi-time frame momentum both green, right? The institutions are buying Hood, right? This is Hood on the daily chart right here. So what are we looking at? We're looking at current time frame, multi-time frame, and we have the 15 EMA here, which could be our support resistance level, right? Now this shaded area is called a dynamic compression zone. That again is more compression. As it breaks above that, it typically gives you an indication that you can go long in that, right? So this is a potential long on Hood. Now I want to show you that on the TC 2000 chart to show you a couple of other things. All right, so this is Hood on TC 2000. Same chart we're looking at right here, exactly the same. See, there's the red candle, there's the red candle, there's the green candle, there's the green candle. All right, so this is Hood. So what else do I look at if I'm going to take a long in Hood? Well, I got to look at my moving averages. This is my 200, this is my 100, this is my 50. Okay, 50 is red, 100 is blue, 200 is purple. They're all sloping up. This is a very bullish chart. Remember what I said about context. What's the chart look like? If you look at Hood, you see how this stock is moving up and it's following that white line. That's the 8 exponential moving average. I can stay in this trade. This trade has been beautiful. It's just we're moving up. We pulled a little bit. We pulled back to the 8 and to the 15, which is the orange line. Had earnings, bounced up and moved back up again. And this is what's called a PBO, or a pullback opportunity. It's come up, it's come back down to the 8 and 15 and bounced back off of it again. And this is a nice setup. Again, we're going to have probably have some resistance right up here around 117 as it gets to the top of that candle. But I don't have any moving averages in the way. All right, so because Hood is close to an all-time high here right now. So that is a beautiful trade. And if I was looking at Hood and I saw it there and I saw this over here, now I know the institutions are in, because these have to be right. Hood, I put that down as a potential long for Monday. Okay. So here's ARRY. This is another one. What do we got here in ARRY? Big pop-up on Friday. Looks nice. But see here? Blue, yellow. I can't take this until this goes back to blue. I just can't take the trade. And it may look really good on the chart. This is what you've got here. Right, here's the TC2000 chart. But you see how it moved up here really, really quickly. This was earnings here. Moved up and it moved through this resistance level I've got right here on big volume. But it's getting extended. It's too extended from the 8 exponential moving average for me to get in here. And I know that the institution had been selling this because I can go back here and look at my SPY super system chart and I can see where they had been selling this all the way through here, all right, on the current time frame momentum. They switched over to the current time frame momentum, but notice the multi-time frame momentum is throwing a lot of chop. So there is not a lot of confluence in institutions buying ARRY, so I don't take it. Okay, I got another one to look at here, Verizon. Right, here's Verizon. How does Verizon look? It looks very similar. Green down here, yellow here. I can't take it long. I can't take it long because it just doesn't have the institutions buying it. It might look great on the chart. Now, one thing I want to talk about here. Remember I said context. What's the context of the chart? Look at this Verizon chart. Can you predict the direction here? This is a mess. This is chop. This is that you don't want to be taking trades like this. I mean, you could take this with and hope that it runs up to a 55.18, but there's been no direction in this thing for a good long time, right? So look at the difference between Verizon and Hood. If you're going to go long, which one are you going to prefer to take? All right. This is important to think about this. You want to be taking the stock that looks most predictable as for the direction it's going at. And Hood is way more predictable than this Verizon chart is. Okay, so that's another thing I take into consideration. But the key here is I can't take it because of this. I got yellow here and green here. Current time frame momentum bullish, multi-time frame momentum bearish. Can't touch the trade. Okay. Let me take another look one more here to the long side. This is Frog. Right? How's Frog look? Well, Frog looks pretty good. We just went from red selling to blue buying. And see how that nice momentum is moving up pretty nicely? It's popping up here pretty nicely. I've got a green trend. I've got a green multi-time frame momentum. That looks pretty nice on FROG. So all things being equal, I like that. All right. So I also take a look at it on my other charting program, which is TC2000. I come back over here and I look at Frog, and I see this was earnings here. I see we had a big drop in earnings, moved up, pulled back hard, and it's starting to roll up again. It's not as bad as Verizon, but it's pretty choppy. But it is potential. It is a potential one right here. Okay, with some resistance up around there. But that's another potential long for Frog. All right. Let's see. I think a couple more I want to look at, and then we'll just go over to the shorts. Right. UNH. Now UNH, you probably heard about UNH. Where Buffett just started buying a bunch of it. So here it is here. But notice how it's still yellow here. It's green here, but it's yellow here. So it's very difficult for me to take a trade in UNH unless this goes back to green or blue on there. So I'd be hesitant to take it. It looks pretty nice technically, but it's had a big pullback. But that's a pretty big move on Friday. It is extended quite a ways to the upside. I probably would wait to see if it settles down. And if I look at it on TC2000, I'm going to wait to see if it settles down back here to this 50-day moving average. See how the 50 is down below the 100 and had been sloping down, but that gap up was Buffett and other people jumping into it. You can see the volume right there. So this thing had been beaten down pretty hard. So it's not something I'm going to chase because the current time frame momentum and this multi-time frame momentum on the daily don't align. All right, so those have to align. That's what I'm looking for. All right, so I'm going to look at some shorts here now. We're going to look at Cisco. Okay, here's Cisco. There's a big drop here in Cisco. Current time frame momentum bearish, multi-time frame momentum bearish. It's okay to buy some puts in Cisco. Right, looks pretty good. If I switch over to my TC2000 and look at the daily chart on Cisco,
just so I can do one more technical analysis. I like the drop here. This is a pretty nice drop in Cisco. It had some pretty big volume. This is a support level down here at the 100-day. This is the 50-day. It just broke through. So if this opens red on Monday, I would be perfectly happy to try to take this. It's a pretty nice bullish chart if you notice, right? It was moving up pretty nicely, but this was earnings, and it just got smoked on earnings. So this is the beginning of a downtrend off of earnings, but that's a pretty decent short on Cisco. Next one, I got a CLAC is another one. I want to kind of show some combinations. Okay, here's CLAC. So okay, CLAC had a big drop as well. And notice we've got bearish right here. All right, momentum indicator is pretty high, but it is bearish across the board. So that's a potential one. Anytime I look at a trade, I'm going to do some technical analysis on it, like I would here on CLAC, and you see that it's coming right down through the 50-day moving average. But that's a big move. Got to be cautious that it doesn't run into support here, because obviously you can see that it's been pretty bullish recently coming up. So you get a little hesitation in there. But the SPY super system is telling us the institutions are selling this thing right now. Okay. And I think LEU was one perhaps. Yeah, LEU was one I like short. So here's LEU. We've got bearish multi-time frame, bearish current time frame, right? And also bearish on the long-term trend, and it's breaking down. So this is potential short right here for LEU, right? And since I've got to look at my TC2000 for any support resistance levels, I don't see a lot. I don't see a lot till all the way down here, probably a little bit right in here, but I don't see a lot of support. This is a nice short. LEU is a very nice short for Monday. It has some pretty good volume here. So I think that's probably a pretty decent trade for Monday. I've got it down on my list as a trade to take. Right. So those are what I'm looking at. And again, that's how I do the SPY super system setups for the 5-minute and for the daily. I've shown you them both. Daily, you have to have current time frame and multi-time frame lined up. On the 5-minute chart, you just use current time frame momentum, along with the VWAP and the 15 EMA. All right, I don't put the 100 and 200 and everything on here because there's too many lines. I'm interested. This is what I'm interested in, is to know if institutions are in the trade. This tells me whether institutions are in the trade or not right here. Okay, so that's really important. And I got some. These are some scanners over here. This is a cascading up scan, cascading down. This shows relative strength, relative weakness. If I was looking for relative strength on a daily, I have a scan for that. Then if you have the software you can get, it says here cascading up on the daily right there. It's going to switch over. It's going to show me stocks that are bullish on the daily. I would just go to just click on them, and I can see what it looks like. NVAX, that looks like a nice potential long. NWL, probably not, just coming off a deep low. Lilly, coming off a big low here, but notice red, can't buy it yet. Too soon on Lilly. CVS, also, notice the choppiness here, so I don't take it. Teva, same thing, too much chop. Because a lot of these stocks are coming off of lows, and there hasn't been enough buying yet to give you an indication that the institutions are buying them. Obviously, DraftKings you're not going to touch; it's still bearish, right? And you can do the same thing on cascading down. I can switch to cascading down on the daily right here, and that's going to show me stocks that would be potential shorts. Roblex, which pulled down hard on news. I wouldn't touch it short, even though it says this here. I wouldn't touch it short. It's bounced right off the support level. Let me show it to you on TC2000, because I looked at that on Friday. See that about 50-day moving average? That's pretty good support right there. So that's a technical indicator that I use to find those trades, right? So Roblex looks like one I wouldn't touch short. MSTR I probably would take short. This is a crypto, red, yellow coming down. I like it for short. IONQ, decent. SMR, these stocks have been fading lately. These are the nuclear stocks, the little nuclear reactor stocks. So that's what these indicators, I mean, these will do for you. and you can switch them to 5-minute for intraday trades. So you can look for intraday strength on cascading up and cascading down. That's going to show you intraday trades. They were very strong at the end of the day. All right, so if I switch over to the 5-minute chart, there is my 5-minute chart on it. You can see the strength at the end of the day. So those are just some of the scanners we've got. So anyway, that kind of covers the whole presentation. Again, we looked at live charts. I showed you the things that we're looking for, the critical things we're looking for, current time frame momentum on the daily chart, multi-time frame momentum on the daily chart. Those have got to be aligned. 15 EMA is something you can use support resistance, but you're also looking at your daily chart is the key for this. Pop out of the box and daily chart context relative to the SPY we talked about. Okay, and know where your indicators are for the 50, the 100, the 200, and on the 5-minute chart for intraday trades, current time frame momentum. You don't need to worry about the multi-time frame momentum. VWAP, support resistance level. 15 EMA, support resistance level. Pop out of the box, telling you that the stock is breaking out of compression, pivot points, and try to align your trade with the market internals at the time. Market internals are bullish, you probably want to lean to long stocks. If it's bearish, you probably want to lean to short stocks. Okay, so that is that's the education or the video for the trading using these indicators on the SPY super system. Again, it's if you don't own it, it's probably something you might want to own if you want to stay consistently profitable, as we have been doing for the last 3.5 years based on this stuff. We don't care whether it's a bull market, a bear market, a choppy market. We don't care. The methodology works on all of them. We just want to be trading with the institutions. All right. So thanks very much for your time and your attention, and I hope this was helpful.